Less than a year after promising to be the first crypto president, Donald Trump has overseen the largest crash in cryptocurrency history. Since he took office on January 20th, more than $1.3 trillion has been wiped from the market, the biggest drop over an 11-week period since Bitcoin's creation in 2009. The recent sell-off comes amid wider market instability following Trump's Liberation Day trade tariffs, which have sparked fears of a global recession. However, Bitcoin's price decline actually started on Inauguration Day, dropping from a record high of $109,000 in late January to below $75,000 by Monday. Bitcoin is now back at the same price level it was when Trump won the 2016 election, driven by his promise to enact pro-crypto policies once in office. At the Bitcoin 2024 conference in Nashville last July, Trump vowed to set up a Bitcoin treasury, protect the crypto industry from Elizabeth Warren and her goons, and ensure all remaining Bitcoin is made in the USA. Since then, however, Trump's policies have had a damaging effect on both Bitcoin's price and the crypto industry overall. Even a March executive order to create a strategic Bitcoin reserve was criticized as ineffective, with some calling it a trick since it didn't involve purchasing any new Bitcoin. Trump's launch of his own meme coin in January, Dollar Trump and Dollar Melania, further eroded investor confidence, resulting in a cumulative $2 billion in losses for investors. This move, along with his endorsement of meme coins, has complicated regulation in the crypto space, legitimizing a flood of new tokens entering the market. Dogecoin, the first ever meme coin, has been one of the biggest losers since Trump took office, losing more than 2/3 of its value over the last 11 weeks. Other major cryptocurrencies like Cardano, Ethereum, and Solana have also seen their values plummet by over 50%. This latest decline, triggered by Trump's newly imposed tariffs, could signal a long-term downturn according to analysts, as traditional financial markets are heavily influencing crypto. Asian stocks have fallen sharply, and the FTSE 100 dropped to its lowest point in a year. Hedge fund billionaire Bill Ackman, who supported Trump last year, warned that the new tariffs of 10 to 50% on all imports to the U.S. could lead to a self-induced economic nuclear winter that might take decades to recover from. Crypto markets typically mirror stock markets, with investors offloading risky assets during economic uncertainty. The immediate aftermath has demonstrated once again that digital assets can trade in close correlation with traditional risk markets when volatility spikes, said Javier Rodriguez Alarcon, CCO of crypto finance firm XBTO Global. Despite Bitcoin's recent price drop, industry experts like Seamus Roca from Xapo Bank pointed out that Bitcoin's long-term value as a store of wealth remains intact. With a finite supply of only 21 million Bitcoins, it's increasingly being compared to gold, which is near record highs. Bitcoin may not act like a hedge today, but over time it's increasingly positioned to fulfill that role, said Roca, emphasizing that one person's economic policy won't determine Bitcoin's future. While recent events have shaken the market, Bitcoin's long-term potential remains. The cryptocurrency is still in its early stages, evolving into a digital alternative to gold, and its true value is still unfolding.